Think reading stocks is complicated? Here are 6 indicators every beginner should know. First, P/E ratio. It tells you if a stock looks cheap or expensive compared to its earnings. A high P/E often means investors expect future growth, while a low P/E could signal value or potential problems. Next, RSI. This measures momentum. Above 70 may suggest a stock is overbought, while below 30 could mean it's oversold. Just remember, RSI works best with other indicators. EPS, or earnings per share, shows how much profit a company makes for each share. Generally, rising EPS is a sign of improving profitability. Market cap tells you the size of a company. Large cap stocks are usually more stable, while small cap stocks often offer higher growth potential but come with more risk. Then there's trading volume. Strong price moves backed by high volume are typically more reliable than moves on low volume. And finally, beta measures volatility. A beta above 1 means the stock tends to move more than the overall market, while below 1 suggests lower volatility. No single metric tells the whole story. The best investors combine fundamentals with technical indicators before making decisions. Follow SuperEx for more investing and trading insights.